Welcome back to the channel, everyone. In this video, I want to talk a little bit about when I buy. What do I buy? Why do I buy it? Basically, my general investment strategy or my approachment to all my investments. I think a lot of assets differ a little bit, so I will be going over my process a little bit. I'll explain a little bit my reasoning and just generally how I look at trades or long-term holds. And in general, just my investment approach. And it's very straightforward, it's very simple, and I think it can provide clarity to a lot of people who have asked me this question several times over. So, yeah, I think it'll be a fun video. Please stay till the end, and yeah, let me know about your investment approach or your opinions on the matter. All right, let's get into it. All right, so here we are at CoinMarketCap. Now, as I've said in the intro, I'll talk a little bit about my thought process about how I'm buying these cryptos, why I'm buying these cryptos, or when I'm buying these cryptos. Now, currently today, the markets or over the last several days, they have been quite red. Tiny little bit of green today, but not very much. Now we can see the fear and greed index currently. It is at a very low fear margin, 34. Or at a very low margin, we're in the fearful territory, is what I should say. We're still in an altcoin season, although I said it before that we need new money into the markets. We've dropped below that $4 trillion again. So for it to be called an actual altcoin season right now, I don't really agree with it. There are, of course, a few projects that are outliers that are performing really well. But the general market in itself is not doing too well. Let's be honest. But over time, I expect that number, that 4 trillion, to grow, and that is where I'm basing this video on. So right now we can see the average crypto RSI. It is a tiny little bit oversold. It was a lot more oversold. So we are finding some stability. We're seeing some new ground. But if we look at these charts, let's pick out Solana, for example. I am a Solana holder. I have had Solana for a very long time, and I still actively dollar cost average into Solana, or basically buy on the spot markets as opposed to leverage trading. If you see a 13% drop on one of the biggest cryptos over 7 days, I personally would say that is a good time to buy this asset, even without looking at the charts. I would technically still always look at the chart. I think it is a smart idea to look if it's on a resistance level or a support level and finding some common ground before you invest. But even without all that, I would say a drop on one of the biggest cryptos like this makes it cheaper to buy. I think we all wanted to buy crypto cheaper. We all wanted to buy Bitcoin before we passed 100K. And we might actually get that chance over the next few months. But in these super fearful times, people always tend to do opposite of what they should do, which is buying when the market's red, selling when the market's green. And it sounds easy, but the mental headspace tends to ruins people's motivations during these times. So I've compiled a little short list, and let me just zoom a little bit into that. There we go. So you should be able to read that, I think. And the first line is getting into a new project. So I look at the current price in history. As I said, I look at the chart as well. Don't try to catch falling knives. Look for support and place limit orders there. Now, especially with a new project, which you're a little bit unsure of, I always put a limit order somewhere. And I do not buy the lump sum. Let's say I have $1,000. I put a limit order for $100, and wait, that first order is triggered. The price drops another 10%, maybe 20% because it's a volatile asset or a small market cap, and then I will not be down 20% right off the bat, and I'll be able to buy that cheaper price as well. So basically dollar cost averaging for those who are not familiar with the term, you try to average yourself out to get the best price. And by doing this, I think you can do this. Possibly you end up buying a little bit more expensive, but it does eliminate a great deal of risk. And I say the less risk you need to take, the better. On some short-term gains, always try to secure some profits. Nobody ever got poor from taking profits. Um, yeah, wait and see for the dip. Wait and see for the dip. Add on, big move, take profits, rinse, repeat. Short-term gains, secure some profits, and either close the position or leave a moon back. Now, this is something that needs a little bit of explanation. If you're buying a meme coin, a small project, something you do not have confidence in that will be there in the next 10 years, I would personally say maybe leave a small amount in, but get at least your initial out and secure your money. That way you cannot lose any more money. Maybe you've secured a little bit profit on the side as well. So however it ends, you've made money, and you can always leave a little bit. I personally do this because I have had instances in the past where I sold and a token, even $100 became worth $10,000 after that, because it did do a 100x or a 10x or whatever. So I always try to leave little bits in here and there and try to see if something performs really well. And I had recently still had a project of which that happened, and I made a few $1,000s just by doing absolutely nothing with it. So I think that is a very easy way to secure some extra profits, possibly in the future. Now, for longer term holds, so this is what I would classify as my main portfolio. So this is my Bitcoin, my Ethereum, my Solana, my XRP. I did sell all my XRP in the past, which I regret doing, but I bought Ethereum with it, which also did really well, so I cannot really complain. But yeah, I did start a new position in XRP, so that falls along those lines as well. Possibly some little SUI, but SUI is a relatively smaller market cap. Even on this, wait for dips in the market. Check the fear and greed index, because I've said it in the past. You can trade purely based on that index. Basically, sell when the market's, or buy when the market's fearful, sell when the market's in greed. And it sounds really simple, but it really is that simple. So a 10% dip on a bigger market cap, like Ethereum, like Solana, which is currently a 13 or 14% over 7 days. So I've said it already. 15 and 20% dips on smaller market cap, also instant buy. So this is something around the $2 or $3 billion market cap, or something like SUI, which is a little higher, maybe $10 billion market caps. They're more volatile because they take less money to influence prices. So when panic selling happens, they're relatively a 10% dip is very likely to happen, but 15 to 20 is less likely to happen. So when it hits those levels, I always try to shift some money into those to those tokens, to those cryptos, because I think that will be relatively good prices to get into them. So that is, in my eyes, a perfect time moment to buy a dip. Possibly put limit orders already in advance when you expect this to happen. I try to do this every month, and monthly I also try to add more funds to my different portfolios and try to shift more money into these cryptos as I go. And it takes a lot of the guesswork out of it, because every month there is a week, at least a week, where crypto does cool down, where people are taking profits. And especially going into December, I think historically we see a lot of funds flowing out of markets as well after a big run up. Now, every season is a little bit different, so always try to look at it objectively, of course, but every month I think is a good time to buy. And if you're also into stocks, where I'll have a little bit of stock talk in a little minute, especially stocks tend to cool down around the festival season and around the holidays. And I think those are good times to grab some stocks on the cheap before closing out the year. And this also sets you up for a much bigger return next year, because you're able to buy very cheap. The increase over the price the year after that is usually a very primed example of being able to buy on time. Now, take some profits on the big moves up, even for bigger cryptos. My long-term holds, crypto, I think, will be much more valuable over the next 10 years. Which includes like Ethereum, Bitcoin, XRP, Solana, etc. trying to cash out a little bit on those bigger moves up and trying to pull some funds back out just to be able to buy dips. So I don't have to, like, I add funds every month, but obviously you also want to enjoy life. You want to be able to do fun stuff, etc., etc. So there is a limit to how much I deposit every month. But if you want to be able to take more advantage out of all these market dips happening, it's very smart to take a little bit of profit here and there. So you always keep, I personally try to keep around 20 to 30% cash at all times. Obviously, that number shifts when we have dips like this, up until the point where it's zero, and then I just add in more every month. And eventually, usually within the month, we have another push up, so that 10% down becomes 20% up, and then I withdraw those funds while also growing your initial amount of crypto. So I think very easy. It's relatively easy, but it's very easy to do, but it's something to keep reminding yourself of. So as I said, always try to keep cash on hand to be able to buy panic in these markets, even without adding funds. Let's say you have a rough month, the dishwasher breaks, whatever, you're not able to invest more, you are able to buy more because you pulled out funds when things were looking up. Now, stocks versus crypto. So I talk about this channel mainly about crypto, but I'm also big on stocks, and I will do another video about a new stock strategy I'm going to try. So I will be posting that in the next day or two. It's different assets, but the approach is relatively the same, especially when it comes to dollar cost averaging. You want to be able to buy as cheap as possible. You want to be buying as much as possible over time. So time is really your best ally in this, as with crypto, as with stocks. The more time you spend on this, the more money you save on this strategy, or save with this strategy, I should say. The bigger your holdings become, the bigger effect it becomes, and the more those better buying prices work in your advantage over time. So this it's transferable. Only the percentages, like a 15 to 20% dip on stocks, you see relatively less often, or you don't see that happen very often. But a 5 to 10% approach is relatively the same thing. It does depend on which stocks you buy, of course, because there's also something like penny stocks, which would be comparable to new projects or meme coins, etc. So this should be margins, not marings, but take profit on smaller margins. So like the 5 and the 10% rule, possibly the 10 and 20%, but it kind of depends on what stock you buy as well. And there is something called dividends. Now, I could do an entirely different video about this, but it's similar to staking on crypto, but it does pay off to hold some stocks indefinitely, to not sell them, because every month you get a little bit of profit that company makes, and they pay that to you either in cash or more stocks. So you will be less likely to sell that stock, and you will be promoted, or basically you get a little bit of sponsorship by holding it. And if you just keep adding onto it, that pile grows. And I actually have an entire retirement portfolio dedicated to this strategy. But like I said, I can do a whole nother video about that. So in short, I just wanted to talk you through a little bit of my investment strategy, how I go about it. We're in fearful territory. We're a little bit oversold. So I would say I'm buying right now. I have bought Ethereum, I've bought Ripple, I've bought Solana, I've bought SUI, I've bought ASTER. I did a separate video about that as well. And basically almost all of my long-term holds I've bought more of over these days. And I think right now is a prime example to buy, considering we're going towards the end of the year. I think we'll see another push up like we saw last year, or this year, beginning of this year, I should say. And considering we are at the lower end, I think we're going to bounce back. Let me know if you disagree with me. Let me know if you have an entirely different strategy or an entirely different plan. And I welcome the discussion. Feel free to leave a comment and I will react to you. If you like this video, please leave a like and subscribe, because I am trying to grow my channel and I'm trying to share more and more information with you as I go. All right. Thank you all for watching, and I'll see you on the next one.